Small caps often a good place to be, just a question of sorting out the wheat from the chaff. We're talking out of Fundamental Asset Management's Chris Boxall, who is manager of the AIM Portfolio Fund. Chris, welcome.
Hello.
Let's take a look first of all at the fund. We've spoken to you about this before, and you've demonstrated the way in which picking the right stocks, it means you do have an edge over the broad market. What are you looking at the moment in terms of some of the moves you've got?
Well, AIM's looking pretty healthy generally, and we think this little basket that we put together out of our core list of stocks is quite interesting. We've got one speculative, but the rest are pretty solid offerings that have delivered, good returns over the last few years.
Let's take a look then at the since inception first of all, at these stocks you've put into this basket for us. There's 14 here, although you can see 2 are now no longer on the list.
Yeah, out and out star performer you can see there is Fulcrum Utility Services, which we're very pleased with. We've got that across a lot of our portfolio, so delighted how that's performing. We've seen 2 succumb to takeovers, and a future slide will show what we've replaced those with. But by and large, we're pretty happy with the performance since we started running this one.
Yes, let's take a look at the second slide, and we can take a look then at not the inception to date, but the year-to-date performance. And we've got a better idea as to how some of these are moving. And indeed, you talked there about 2 stocks that you've replaced those other 2 with. You've got Patisserie Holdings and Watkin Jones on this list that haven't appeared before.
Yeah, dealing with perhaps the underperform briefly, Atlantis Resources was the top performer last year, and ironically, since announcing quite positive news, it's come off a lot. So we're going to sit there patiently and see how it comes out of this. It's the tidal energy pioneer, and it's extending into other renewable areas, offshore renewable areas. But that's underperforming. That's our speculative number. Not yet profitable, but plenty of potential. Out and out star performer is Fulcrum Utility, and ironically, in the period, that actually didn't announce any news. Just people, the market, the AIM community has cottoned on to what an interesting little company it is. Just over 100 million market cap now.
Let's go and take a look at the chart of this, which we've got here, Fulcrum Utility chart. As you say, looking relatively impressive. It's just returned to break recent highs, pulling back a little bit, currently at 63.2 pence.
Yeah, we're still buying this. We think it's in a great position. It installs pipelines, principally gas, but now license for electricity as well. Importantly, after the installation, it owns the pipeline, so you've got a long-term revenue generating potential from that as well. And it's going into the metering business as well, much like another one of our stocks, Smart Metering Systems, which again, offers long-term visibility of revenue. And we think it's a really exciting little offering, really well managed. Early days on AIM were tough, but since then new management's come in, the 2 Martins, and they've really done a great job, really delivering. So magnificent generator of cash, free cash flow yield, circa 6-7%, very high returns on equity, just the place you want to be. And we think it's very, very interesting, this business. Yeah,
one of the other ones that was on the list which has done well so far year to date is 12% rise for AB Dynamics, another stock that's very much in your crosshairs at the moment.
Yeah, it is. AB's a small business in the automotive sector, providing automotive testing and measurement equipment. Again, it's in a sweet spot. There's a lot of money going to its market, and it's building a new manufacturing facility, and it's got cash on its balance sheet to do that already. But it wanted a little bit more because it sees big opportunities in the marketplace, and it's actually planning to build another facility before the new one is even finished. It raised money at about a 6% discount, raised £5 and a bit million, I think it was £4.75, which was a small discount to the price at the time. And it's just continued to take off. And the chairman let go of a few shares, but still owns 30%. Again, much like Fulcrum, it ticks a lot of the boxes. Underlying market's good, growing top line, supportive market, big returns on capital, on equity, great operating margins, nice cash flow, conservatively managed, and still the chairman, he's quite an elderly, Tony Best is quite elderly, but by gum, he's really driven, entrepreneurial, enthusiastic. There's another CEO in there as well now, supporting him. So it's a really, really exciting story.
Yeah. I want to take a look, if we can, at another stock that we have talked about previously. It's XLMedia. Yep. Now, this is up 11.8% so far this year.
I think the market's cottoning on to XL. They're suspicious of its offering. It's essentially, its core offering is ad tech in a word, driving investors or gamblers to the online gaming sites, social gaming. and it's hugely cash generative, throws out a nice dividend as well from that cash, but it's reinvesting it as well in non-gaming markets, so utilities, big, huge markets in terms of lead generation. So it's diversifying a little bit away from this gaming risk and this perception that it could all come tumbling. In the meantime, throws out a very nice dividend, and I think it's still very, very cheap, circa 10 times multiple, close to 5% yield. You know, you can't really ask for more. High returns on equity, nice high operating margins, and willing to give back to shareholders, you know, sooner rather than later.
Yeah, as you say, a lot of these stocks are talking about this morning paying dividends, but it's also a question of getting in at the right time as well. And Watkin Jones was brought into your list last time we spoke.
It's a bit like XL, yeah.
I mean, it's done a 20% return since I think the beginning of the year.
I think Watkin of the batch.
What does it do exactly?
It's got various strands to its business, but at its heart, it's a constructor of student accommodation. If you've been, as I have, privy to visiting universities, the amount of construction and investment that's going on around the country, obviously you've got student fees are up as well. A lot of people like having, long-term investors like having exposure to student accommodation, delivers reliable, consistent returns. So again, underlying market is terrific. So Watkin Jones assesses sites, acquires sites, develops, and more importantly, forward sells. So it de-risks itself. And what's really interesting about it, so at its heart, you've got this construction business. It still does some residential construction, but you've also got a property management. It's managing its student beds as well. And I think it's going to be managing by year end, I know it's circa 18,000 beds. Now that offers the contracts are 3 to 7 years, a nice, reliable, long-term, revenue stream. We like a lot, heaps of cash on its balance sheet, again 4% yield, still managed by the founding family, and for us way too cheap. I mean, of the four we've spoken about now, in terms of earnings multiple, AB Dynamics looks quite expensive on sort of 25 times, especially when they've got to reinvest in the new site. But Watkin Jones, to me, looks very, very cheap still at these levels.
As a fund manager, are you happy to continue to run your positions you've got at the moment?
Absolutely. Keep running them if you like them. Valuations stack up. If they're delivering as they intend, there may be occasional dips. You may have market wobbles. You get nice yields out of a lot of these things as well. So why go anywhere else? There are opportunities, but when you're managing a bigger pot, it's hard to keep jumping in and out. And aim for inheritance tax planning as well. You have to keep a track of, full reinvestment, replacement relief to cover the replacement relief rules.
Yeah. What about the valuation thoughts on AIM? I think the AIM All Share and the AIM 100, I think are both up around about 7 or 8% so far this year. There's a lot of question marks being asked about the major blue chip indices and the record highs they've got as it's sustainable. What are your thoughts on valuations for the AIM
Pockets
stocks?
of AIM are richly valued, and the momentum and hype is driving things. People are pushing up stocks and talking them up. I mean, you can't get away from that. And some of them look a bit crazy. Maybe we may touch on one of those, but in a small market that's relatively illiquid, it doesn't take much to get a few retail buyers in there to start hyping these things up. When they come down, they really fall quickly though, so one has to be a bit careful. So we have those pockets of overvaluation, but also you've got a lot of stocks that are meaningfully growing earnings that aren't that expensive. If they're chucking out dividends and cash, it's an interesting place to be. And they're double-digit earnings growth. So a lot of the stocks we mentioned today are growing earnings at 10, 20%. Well, that's fabulous. Compared with the main market, it's a real breath of fresh air. Yeah,
let's pick up on that point you mentioned about some of the outliers. What are you thinking of there in terms of some of the names?
In terms of the super values, you have that's been driving AIM's performance and skewing things. You have the Boohoo's and the ASOS's, Fever Tree. Are their valuations justifiable? I don't know. I really don't know. People seem very excited, overexcited in some respects.
What about the likes of Purplebricks? It's been in the news recently. It's raised £50 million. I mean, this is a stock that's got grand overseas ambitions.
Raise £50 million to go into the US, I think it's fantastic. I think it's commendable that they're going for it. Really, a lot of companies should be more aggressive. They see an opportunity. However, do I see it as a potential buy at these levels now? No. I mean, I think its market cap is over 750 million. 750 million for a business that was formed a few years ago, which hasn't which has huge numbers of competitors in the UK. I think there are 20 plus online estate agencies, which has not yet delivered, is just it's mind-boggling to me. But I like the fact that unlike many AIM stocks, and we may touch on another one, at least it's willing to go for it. It sees a market opportunity, it's on the stock market, it's on a public market, it has access to capital, it has some big investor backers who are willing to chuck money in at these stratospheric levels, and it wants to go for it. That's what everybody should be doing. You've taken the time to go on to AIM, and you've got all this hassle around it, well, go for it, raise some money.
The other stocks you're mentioning?
dotDigital, lovely little business, fantastic little business, delivering heaps of cash, highly profitable. It's involved in email marketing. One of its programs is dotMailer. To my mind, it's doing the opposite of Purplebricks. It has an opportunity and it's not going for it. I mean, its US revenues are relatively small. It seems to be delivering most of its return growth through selling more to existing customers. There are loads more customers out there to go for. Get going. The opportunities not for long. And the final one really, if you're interested in Purplebricks but don't want to pay a crazy valuation, have a look at little MartinCo. MartinCo is at its core and the profitable it is a franchise lettings agency. But it acquired one of these online estate agents called YouMove. And YouMove is quite interesting. It's in the same space as Purplebricks. It's not as big, it's not spending as much on marketing, which it should be playing more into it, but you get a little bit of Purplebricks in MartinCo, but you still get a profitable business in MartinCo. Yeah. So perhaps MartinCo may start re-rating, who knows?
It's a good example as well of a stock that can go down.
Yeah,
as
you had it's very small, highly illiquid. We had the worry of changing the lettings rules, and everybody freaked out and got out, and suddenly calm returns, and they see perhaps
they realise you can actually make a profit.
It's not all bad news. And YouMove, ironically as well. I did a search on online estate on the YouMove site. Yeah. There were more properties came up in our area than the equivalent for Purplebricks. Right. So they had many more properties on offer, which I thought was a small sampling, but interesting.
Okay, Chris, all right, we'll leave it there, but thanks for joining us, taking a look at some of the AIM stocks that are around at the moment, some of the stories that are making some of the headlines in the AIM area at the moment. So that's Chris Boxall from Fundamental Asset Management, where he manages the AIM portfolio basket of stocks.